Morning from Chicago traders. It is 8:02 Central Time on Thursday, the 4th of September 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A lot going on this evening, or on the overnight. Let's run it down. The news section of the broadcast today is going to be a little bit on the heavy side, but we need to keep track of how things are shaping up. Fundamentally, just as a note, ECB Speaker Draghi is still speaking, and you might hear me pause here and there if I hear something. Overall, German July factory orders came out. It came in at 4.6% versus 1.5%. Finally, some strong news from Germany. Ukrainian army is on top alert near port city of Mariupol to push back on attack by rebels. There's a ceasefire discussion between Putin and Poroshenko, and that's kind of seems to be treading water from the Kremlin. Fed's Fisher yesterday said that the Fed's closer to deciding on new exit strategy, so that's important. That coincides with a potential announcement by Yellen soon. Beige Book showed yesterday that moderate to modest economic growth had occurred in 10 of 12 Fed regions. Wages and prices unchanged. Of course, wages and prices is a debate that's going on politically right now, with many states and jurisdictions pushing for a higher minimum wage here in the U.S. We'll see how that plays out. The Bank of Japan kept policy unchanged, will increase annual monetary base by 60 to 70 trillion yen. It's a lot. The Bank of England keeps interest rates unchanged, will reinvest about 14 billion British pounds of cash flows back into gilts. ECB unexpectedly cuts deposit rate to negative 0.2% from negative 0.1%, cuts marginal lending rate to 0.3% from 0.4%, and cuts the refi rate to 0.05% versus 0.15%. ADP came out today. ADP is a payroll processing company that puts out a number just usually a couple days before our non-farm payroll unemployment number, which comes out tomorrow morning. ADP comes in at 204 versus 220,000 expected. Initial claims 302,000 versus 300,000. Continuing claims is at 2.464 million versus 2.510 million. So initial claims missed by a little bit, and continuing claims is better by a little bit. Draghi cuts the growth forecast for 2014 and 2015 and raises it for 2016. 2014 growth is expected at 0.9% now versus 1%. ECB lowers inflation outlook for 2014 but keeps 2015 and 2016 unchanged. 2014 inflation is expected at 0.6% versus 0.7%. So this is what the ECB is pushing for. They want to increase inflation slightly and spur growth through their rate cutting and potential QE, which is the next step. This is important. ECB's Draghi says it is at the lower bound of a technical adjustment to rates no longer possible. Decision was not unanimous. So essentially what Draghi's saying here is there's not much room left in the interest rate to play. I mean, we're talking about a refi rate of 0.05% versus 0.15%. There's not much room left there. He's already gone negative on the deposit rate. ECB's Draghi says the council members in favor of doing more, and QE was discussed at their meeting. So keep an eye out for that. Now, with that, let me really quickly go through the economic releases so we can get that out of the way, but I also wanted to kind of pull up a Euro chart and show you what that product is doing. I was on Day Trading Radio yesterday in a discussion about the ECB, and I had said I had told the host of the show, Johnny, that I'm expecting that the euro would touch the 130 handle, and this morning it pushed 129.96, I believe. So it went through it by 3 pips. So I knew the ECB announcement was coming, but I didn't expect it to do it all in one move. Essentially, the euro had dropped one entire handle. Today, economic releases we have at 8:45. That's 15 minutes after the open, 8:45 Central. We have the market PMI final services expecting 58.5. At 9 o'clock, we have ISM services expecting 57.6. At 9:30, we have EAI natty gas. I have no estimate for that. And then at 10 o'clock, instead of yesterday's 9:30, at 10 o'clock Central, we have crude oil expecting negative 1 million barrels, distillates negative 1.2 million, and gasoline negative 1.45 million for those who trade crude. At the same time, we have the announcement for next week's auctions on the 3-year, 10-year, and 30-year. The 3-year is expected at 27 billion, 10-year expected at 21 billion, and 30-year expected at 13 billion. At 11:30, we have Fed's Mester, whom I've never heard of before, Fed's Mester on monetary policy in Pittsburgh. Let's switch over to the technical side of things and look at our charts. So let's look through the story as it happened. You recall Tuesday opened out of range, went down into the point of control, walked back up to the open, and then sold off to the other side of last Friday's range. Remember, Monday's a holiday. It's not included in these charts. I'm only looking at day session. Day session only 15-minute here. Not too concerned with the overnight. And in the market, after hitting 92.75 on a double bottom here, a clear double bottom, not the best of lows, but we saw buyers come in strong on the delta and taking the market back up. And where did it go? It went right back to the point of control, and it closed right at Friday's close. So what you have here is a doji kind of formation with the market closing right at 99.75. Okay, and then yesterday we gapped up. We went to 2011 overnight, opened at 2008.25, tested 2008.50, and then came back in. And the expectation was for the market to have responsive selling. If you recall from yesterday's Trader Bite, responsive selling into the prior day's range, and then basing. The expectation was for it to base in here, test this point of control at 2000, put a base in here, and then start to drift back up. And the next level up was 2013.50. It did not do that. What it did is it fell through, went to the 2000, had a bit of a pullback, then it pushed to 97 again. Remember 97 I talked about as a target for Tuesday, and the reason for the 97 is you can look at last Thursday here, multiple touches of 97, and then it was retested. We broke through and we retested it from the top on Friday. And then again, we retested it again on Tuesday and fell through it again before breaking up through it. So this is a pretty logical touch of 97. That was the next target down, and then it pulled back to the point of control, to the IB low and mid, which is one of my favorite setups, and then it rotated back down for another 5 to 6 points to 96.25, finishing the day on the low side. The way this has shaped up, the low is actually a decent low. It is not, if you look at it on a market profile chart, you can see 4 TPOs on the low. That's a pretty decent low. It's not the greatest of lows. It does not show a lot of excess, and the point of control was moved down to 99 and a quarter the prior days at 2,000, the day before that as at 2,050. So you notice here a 2-tick creep down of the point of control. So overall, this was shaping up to look like it was going to extend the overnight low down, just a tad to maybe 94.50 or so before chopping around and walking back up to the 2003 area, 2002. But with the ECB announcement and the overnight news, we basically stayed in range of yesterday's trading. Given the level of intervention here by the ECB, for us to remain in range of yesterday's trading is kind of interesting. You would expect it to be a lot higher. I'll show you some of my favorite products on Eurex. Eurex is the exchange that I actually made the turn on in trading futures. I started out as a Dow trader. It was cheap to trade the Dow, and it had a $5 tick, so we didn't have a simulator. As a prop trader, we went right in head first live. But I found trading the Euro stocks was the first place that I actually had my first big days. So I'll show you how those products are moving and what that is telling us in a second. This trader bite might go a little bit longer than normal. There's a lot to cover here. So overall, yesterday's story, just to stay abreast of what the market is doing. So here we are. We open right up here, 2008 and a quarter, test up. We put in the opening swing low. Looks like it's just not able to shake off the 2007, and then finally it breaks lower. We never got a retest of the 2008 50, so the opening swing was uncertain until we have this confirmation here, 2007 again. See that? It's not able to get back into the OS. This is the mid as well, and it starts to drift lower. And here we're breaking into the prior day's range at 2004 quarter. So the next thing we expect the market to check is 2,250 and 2,000, the value high and the point of control. Value high 2,050 comes within a tick, and then we get another rotation to the mid. There's the rotation to the mid. There, the mid's touched at 2,575 on the dot, and then it breaks lower, and now we're trading yesterday's value, so the next target is likely to be 2,000. So we're looking for 2,000. There's the 2,000 touch. It gets to 99.75, which is the prior day's close and Friday's close, and then we see a small reaction here before it falls off. You can see by the size of the reaction, it only got 1.75 points on the counter reaction. Very, very weak. It could not get back to the IB low. The expectation then is 96.50 with a pause at 97. Remember the 97 level that I was talking about. So the next expectation is for it to cross the entire value range, giving us 96.50. So that's what we're looking for. Here's the 97 and a quarter, and then it manages to go back to the mid again, 2,275. I keep talking about the mid. As I said, this is one of my favorite spots to look for a trade. And then the market just chops around, and then finally it gets to 96.50 by a tick, 96 and a quarter, and it shifts. The point of control shifts down right here, right on this bar, shifts down from there to there. Point of control creeping towards the low of the day, and it closes near the low of the day. So the expectation is for the market to drift lower. Pretty decent taper on volume. As we went lower, the auction shows that as prices went down, there was less and less interest in the form of volume. Remember, the reason we're looking at the histogram here is because the histogram shows us really how much traded at each price. This is a very important thing to look at. How much traded at each price. It tells us the level of interest of the market participants. If the price is fair, then you're going to get a lot of trading at that price. If the price is unfair, then the market will likely move away, since there will not be many participants taking the other side. So the market closes at 98.75, and left to its own devices, I think the market have tested even lower on the overnight, pushed maybe towards 92.75 or so, and 94.50, but it did not do so. And then in the overnight session, we have an open that was very, very dull. There was nothing going on during the Asian session. The Asian session is almost a session that I want to remove from the chart. It doesn't provide any insight at all, really, until the European Open. European Open right here, European indices start trading at 2 a.m. Central. A quick test in 97 again, and then the factory orders number comes out, and the market starts to drift up in anticipation of the ECB. ECB announcement right here, 2007.50 is the top, and the market just chops around. A lot of volume. You notice that we didn't spend much time here versus down here. We didn't spend much time here, yet we have a ton of volume here in the upper bound. So looking at this, we have just basically nothing down to 2050 or so on the overnight. Overnight volume is heavy, 273,000 versus 120,000 or so lately. And so the point of control here has some value at 2005. 2005 was a measured move target from before, but that's really irrelevant here. The overnight high is not that great. I'm indifferent to the overnight low. I don't think it's meaningful. But the overnight high, the fact that the market pushed twice in a 5-point range, was only able to take out the high by a tick. That could be read as a failed auction, but overall it looks like there was a lot of volume that went off right at the high, a tick within the high, and to me that looks like a weak high. In any case, that weak high is in line with the intermediate and long-term trends anyway. So overall, looking for what will happen once we break below the 2050 on the ES on the open. Okay, now here's the interesting stuff. Here's your Bund. The Bund is essentially the German 10-year. The Bund has been pushing new highs for quite some time. As yields drop, the value of the Treasury will increase, or the value of the Treasury increases, which causes yields to drop. As the coupon rate stays the same and price goes up, the relative yield becomes smaller and smaller. So this is making all-time highs or something. I believe it's all-time highs in the Bund. And then today, as the announcement came out, we have a quick spike up. Spike up to again push yields down in response to the lower interest rates announced by the ECB, but then the market's recovering a lot of that. Contrast that with the euro. Here's the euro. These two tend to move in a correlation. The euro here is in a 15-minute chart. This is also a 15-minute chart, and the euro has dropped hard. It dropped basically an entire handle plus some. Okay, so it dropped from 131.40 down to 129.96. No recovery at all, whereas the Bund has pushed up and has come all the way down. The Bund is again a Eurex product. It trades in 10 euro ticks. 10 euro ticks. There are 100 ticks to a handle in the euro. In the Bund. I love a Bund. The Bund's a great product for economic announcements, especially European economic announcements. It does move quite a bit. Again, you know, there's a substantial risk to trading futures, so you need to be aware of the fact that there is a lot of leverage in these products. Anyway, the euro has been steadily selling off over time. But let me not focus on the euro right now. Let's look at the Bund real quick. It's noticed that the market has moved back to the scene of the crime, as we call it. It's moved back to where it was when the ECB announcement took place. Isn't that an odd thing for a fundamental product after such a big announcement. I think we need to keep an eye on that for this session. Overall, the Euro stocks, which again, this is the Eurex product I made the turn on and became a profitable futures trader on way back. Very strong, really good composure here in this product. This is essentially the ES of Europe. Again, it's a $10 tick, a 10 euro tick. Also, so it's trading at $13 a tick. Overall, it's recovering from the pullback quite nicely. Has not made new highs recently. It's been since about June when it was pushing highs, going back to 2012, and it's recovering a little bit. There's a lot of news out of Europe that caused the European indices to weaken. The main factor being the Ukraine crisis biting into the European economy because of the trade relations with Russia. Let's look at the euro for a minute. Let's zoom out a bit and go to a 60-minute. And you can see the euro here. The euro moving down quite a bit. It is finally back to its point of control, the composite point of control. This is an area that it battled a lot in the past, 130.99, 131, and now it's pushed through that point of control. It has spent a ton of time here in the past. When I scroll back, if you look at how the market traded this area, this goes back to July of 2013, May of 2013, June, May of 2013, and we've spent a lot of time here before that. And see that this is the key balance zone for the euro. 131 even is a key level for the euro, and we're back to it. So it tried to push through, it tried to push higher on the action by our Fed here in the U.S. and so on. There's an kind of an underground currency battle between these central banks, and the euro is winning part of this battle by deflating or devaluing its currency. Devaluing its currency allows the producers within that country to sell their product cheaper, brings in more money for tourism and so on and so forth, which then spurs growth in the economy, which then allows the ECB to kind of step back. So the ECB is artificially creating that growth right now in order to start things off. It's essentially, central banks act as kindling for their economies to get the fire going. But the goal is for the economy to be self-sustaining, which we have not seen since 2007, which is essentially a huge part of the reason why trading has been difficult since then. Overall, what do we have for today? The primary expectation is that, of course, we have 5 minutes to the open. The ES is going to open in value, right up against the 2002-2003 LVN left behind from yesterday. It's going to open in value. The expectation this morning is that it'll have a responsive seller. It's likely to have responsive selling back to 2000. I expect it to test the 99, 99.75 area, and I expect it to find a buyer to push through. It's going to have to take over the 2003, but it's got the overnight point of control. If you remember from the overnight, that we have a very, very evenly distributed area here with a fair amount of volume with a point of control 2005. So the over-under for this pushing higher will be 2005. For today, I think overall it'll likely be a very choppy open. We have two numbers, 845 market PMI and 9 o'clock ISM services. Those are not major. And then don't forget that tomorrow's non-farm payrolls. This is a major release and a major driver of Fed policy. So the afternoon trade might get a little bit turbulent. But overall, it looks like the market's going to go into rest today. We may see a lower low. We may see a lower low. The expectation is initially to test lower, but if it goes higher in the morning, if it goes higher and fails at 2005 or so, the expectation is that it will take out the 99 quarter, and it is very, very likely to take out the 97 for our overnight stat and start moving towards 94.50 and potentially 91 and a quarter for today. So that's the key expectation for today, is that it will chop in here and then eventually resolve itself to the downside. The second hypothesis is the opposite, chop, 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 and it starts to break and go higher with the intermediate trend. But I think the market is likely to go into balance today. It's shaping up that way. Okay, I've talked a lot. I'm sure I've confused some of you a little bit. Key elements to look at. Oh, by the way, I wanted to show you the fundamentals chart. Look at this new highs. The new highs keep moving higher. There's a lot of underlying strength to this trend that we're in fundamentally. Technically, the market keeps making new highs on a trending new high number on the New York Stock Exchange. It's got the support of the stocks underneath it. The put-call ratio is in line, is behaving normally. There's nothing outstanding here. So I think this market's likely to rest a little bit, but still has fuel underneath it to continue higher. The net volume on New York Stock Exchange is continuing to grow, and net issues are continuing to grow in a positive direction as well. So overall, if you're bearish, you want to stay flat or use options to hedge your short bets. Good luck today. Watch your risk, and I'll talk to you tomorrow. Take care.